The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, as we start off the beginning of the end of the weekend, as we start off getting ready to wrap it up. And I can think that just about everybody I saw driving out here today certainly had already left the building and were pretty much not thinking with the right part of their bodies, as a friend of mine says, cranial rectal inversions. So I can pretty much tell by the way people are driving whether or not they've got driving on their mind or the weekend, and it certainly looked like a lot of people already had fast-forwarded into Memorial Weekend next week. And I think we can see a little bit about that with the way the market is trading out here. We're basically right at the support level at 1869, I'm going to call it. So we're off about 2 points on the S&P cash. We are 1.96 billion shares, so not a huge day. Of course, we did go down lower, and I'm trying to think that I think we went to, what, 1862? Let me take a quick look here. Let's make sure. Low of the day, 1864, excuse me. And we kind of popped up. Not a lot happening, but not uncommon for an expiration week where we had kind of a downside bias that didn't really come in, except for the last 2 days. To me, this is a lot of options expiration hijinks. And we're probably going to see a lot more about what this market truly wants to do next week as we're out of expiration. Monday and Tuesday, a little bit of action. Wednesday, we've got Fed notes. And I think that's about it. We've got a little bit of earnings. We've got Best Buy, which I don't think is going to do much to the market. The only one possible, I think, next week that could get any kind of action in these markets is HP, and I don't expect any surprises from them either. So I think we're going to have a quiet week going into next week. Going to be kind of hard to make any money. If the VIX was high, I'd be selling spreads for all week and watching the decay slowly go into my bank account. But at this point, with the VIX at 12.87, hard to think that you want to be a seller of options spreads right here, even though you could still make money, just not make a lot. I like to see that VIX about 50 and be selling option spreads. And probably not going to get that lucky, but we will look at it. And, of course, just not a lot moving anyway. There are a few things moving, and we'll get into that in just a few minutes. One with a true haircut and a lot of highly short stocks getting a bounce today. We're going to talk about that hopefully in the first segment today. So we'll be continuing to watch that. As always, we like to start off after the little bit of the market news. And today in the market, I think it is actually, I've got 1960. I think it's actually 1920. I don't know why I put that in there. Maybe I missed it. We always think is kind of 9/11 and maybe the Oklahoma Federal Building bombing is the first terrorist acts, and nothing really happened before because we didn't know about it. But in 1920, around noon, a wagon with 100 pounds of dynamite and about 500 pounds of iron slugs. These were weights. They'd robbed a window company of the weights for the sash weights. So you took all these sash weights and basically wrapped them around a giant keg of dynamite and had some horses drag the cart up right in front of the J.P. Morgan building at lunch and set it off. through kind of a stroke of luck, there weren't a lot of people out in the street at the time because someone was doing something, and everybody, probably within 30 seconds of whoever did it, lighting the fuse, all ran over to the steps of the New York Stock Exchange. And only about 30 people died instantly. It could have been a lot worse. But these were anarchists. And there was an Italian anarchist who they pretty sure did it, trying to get two Italian anarchists out of jail, and they said they were going to continue to do this. But their buddy, actually, by the time they caught up with him, he'd left already on an Italian ship and stayed there until his death in Italy, basically. Went back there till he died in 1963. Still an unsolved case, of course, pre-FBI. But if you ever get a chance to go downtown New York and go on Wall and Broad Street, wander around, you'll see the J.P. Morgan building. And out of spite, they never filled the holes in the granite that the building was made out of. There are some really nice hero studies, just like we saw in 9/11. There was a 17-year-old boy who broke into a car and started shuttling people back and forth to the local hospital. He stopped, rings the opening bell at the Chicago Merc to inaugurate the world's first day of trading foreign currency futures. This is the day in 1972 that FX started to live. He was inspired when several banks refused to fill his order to short sell $300,000 worth of British pounds sterling on the UK government's indication that its currency was overvalued. So pretty much the best thing to do, you get somebody that's acting like a jackass, you just take their business. And why he was an interesting guy, I never really knew he was involved in all of that. But this day in 1972, they rang the bell on FX trading and when it started. We were talking yesterday about the election in India being over. It was a landslide, and the gentleman that won, his name is Modi, is a huge capitalist. They've had problems for about 2 or 3 years in India as the socialists had gained a upper hand. Basically, there were 3 segments to their political system. 2 had ganged up on the conservative side of the aisle and had been doing all kinds of stupid things, trying to backdate taxes, everything they could to make sure that businesses ran away and that foreign investment fled. Well, the referendum came in and they won a huge landslide. His name is Modi, M-O-D-I, and his first orders of business are going to be getting outside investment into the country and working on a money exchange so it's easier to get cash in and out of India, which is the big problem. The stock markets went batso-rizzo on it, and it is, you like that? You like that kind of, what was it? Ratso-rizzo, I guess, is the one I'm thinking of. But we'll take a quick look here and pop it up here. But these are the Indian names out there. ICICI Bank, Red Diff, SIFI, India's Fund, International, Flash, the iPath ETF, all these things. If you're looking at Tiger TV right now, some of these up half a point, but like IFF, but a lot of these up 5, highest 9%. But that's why I was kind of talking about it yesterday. I had kind of a feeling from what I was reading in the news that these guys would win, but kind of hard to tell. I didn't bet any money on it. The biggest problem is when you have an election where they just go around from town to town for 5 weeks gathering votes, a lot of things can change. I don't know that about that system. I kind of like ours where it's done in one day and the next day someone concedes, someone declares a victory for the most part, in case there's a hanging Chad out there. But it looks to me a lot more like India is going to be very pro-growth business. And to give you an idea, this is the comparison that I've been hearing from people that watch the political system. They said it's kind of the equivalent if Texas is all the politicians, everybody that ran Texas suddenly was put into California. That there would be low taxes, there'd be no more ridiculous nutso tax ideas and gouging the rich. It would all be about, come on down to us. We're a great place to conduct business. Instead of trying to put a thumb in your eye like a couple, 3 or 4 states around the country that are fairly not interested in business. Kind of funny that Hollywood is supposed to be the center of filmmaking now, and you can't hardly find a film made in L.A. again. Every time that they want to film in L.A., if you watch it, like Battle for L.A., some of those other movies, all filmed, strangely enough, in Louisiana, where they've made it a haven for people to come and make movies. But huge move out here today for all those Indian companies. Rackspace Holdings was up 20% earlier today, up to 21%, and had a huge bounce after coming out with earnings, but also saying that they hired Morgan Stanley to explore the strategic options for the cloud services company. I had been warning you about being short any of these companies with a high short interest. Rax had 6.5 days to cover on the standard of volume for the last 30 days. And it's like this, or news like this, that can always run these stocks fairly quickly and hard. And we're seeing that in more than one company. Also seeing JCPenney with the same thing. They had 5 days to cover on theirs and popped fairly nicely up. I saw it up at 10:30 earlier. I think it rolled off a little bit since there. But you got to watch these very highly short stocks. They will come and bite you. Bite. Anyway, we'll be back in a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we were just leaving off with J.C. Penney, talking about a lot of these stocks with super high short interest. You got to be very careful with, because J.C. Penney basically just not dead yet. Kind of like the Monty Python thing, bring out your dead. I'm not quite dead yet. You will be. J.C. Penney's got some problems. They're probably not going to get fixed. But almost all these companies, they work very hard to make sure that they push out all the shares before the company goes belly up and runs out of cash. J.C. Penney has done a fairly good job of stopping the bigger hemorrhages out there. I don't think that over time they have a snowball's chance on Georgia asphalt middle of the summer with a, 105 degrees sun out there. But it is going to be a little while longer before they're pronounced room temperature. But probably the biggest thing that when you were watching the earnings rollout was the huge spike when they said that they got basically another $75 million line of credit. And that's what everybody was looking for. They at least now have time to maybe solve their issues. I don't think they're going to solve them. But they're going to be a little bit better off this year, close some of the worst stores, and going to give hope. But, you get these stocks 5-6 days to cover for volume. It all gets covered in one day, and you're way on the other side of having these. Most of the people that are short this stock are, of course, big hedge funds that can sit on this until it dies. And when we look at some of the other stocks like Radio Shack, that's going to happen eventually. Sears Holdings, as one guy called it this week, I forget who called it that, the biggest liquidation and longest liquidation of all time. So it is going to be interesting nonetheless. But keep an eye on those highly short companies because they are all over. Okay. One of the other things I wanted to bring everybody's attention to is that there are a bunch of filings coming out and will be all the way through next week. These filings from the big hedge funds and the titans of Wall Street a lot of times differ from what these guys say publicly. Mr. David Taper, over the last couple of days, is being blamed when he said that he was a little nervous at these levels. Well, for a guy that's fairly nervous, we find out that he's been buying a huge amount of shares of some different stocks. So for a guy that's very nervous, he's doing one thing and saying another, which is not uncommon. I see big hedge funds and people like William Buffett do this all the time. So nothing new, but this is the truth when they do the filing. The rest, maybe propaganda. And you can really tell who you can believe and who you can't on Wall Street. The Third Point hedge fund run by Dan Loeb dumped all 8 million of its shares of Yahoo. Kind of interesting. If you thought that Alibaba was really going to come out, you were going to be a huge holder of Alibaba stock, why would you dump 8 million shares? I think a good indication of how Yahoo, on good news and that spike, pretty much had it all evaporate in $4 down. Wanted to get up to $40 and back down to $36 in a hurry. But I think Tom said it best. When elephants get in and out of the pond, they're going to leave some ripples. And we are seeing those ripples, but we're also going to have them reported. We can know what these big hedge funds do if we pay attention. We can tell whether they lie or generally lie or only lie every once in a while. And I think I talked about Chanos yesterday. And one of the reasons I like him is I've never caught him in a lie. Doesn't mean he hadn't said one. He is on Wall Street. But most of these other guys do have a tendency to do one thing and say another. So just keep an eye out that we're going to see a lot of these. One of the other ones out last night was that Carl Icahn has doubled up on Apple shares, bought another $1.6 billion worth over the last few weeks. So interesting. And I think that's... we got a couple of blow-up du jours and some other things. But here's the one I was looking at. World Wrestling Entertainment plummeted Friday after investors reacted negatively to the company's announcement of its television deal with NBC Universal. And it got hit and smacked hard. We're going to talk about that when we come back. Then we're going to get into some charts later in this hour. Give me a call, 877-927-6648. No emails today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Yesterday, at the close of the show, I said what we're looking for a signal to say I'm wrong and that we're not going to have a low volume short squeeze into Memorial Day weekend. Is closed below 1868, and we're just a couple of points ahead of that. So is this going to be one of these tie goes to the runner things? We'll have to see, but I thought by the end of the day we'd be up about 7 points on the S&P cash. We'll see how we close here, but just a little over 2 billion shares. We have gone down lower. It will be on much lighter volume. And summer trading and lighter volume may be problematic over this next week, but we'll keep an eye on it. We were talking about WWE and Mr. McMahon, all those guys, off 42% today. I had been watching the stock balloon up on what was really kind of a dubious articles about how much money they were going to get for this new programming thing, and for the life of me, I couldn't figure it out. I would have shorted it if I could. What we did find out from the filings today is the company would need 1.3 to 1.4 million subscribers for the network to compensate the pay-per-view and on-demand declines that they'd gotten. It had set a goal of 1 million subscriber for the end of this year. But they're saying they would still lose a net loss of $45 to $52 million. Not a great thing. And I don't know. This is kind of one of those businesses that goes in and out of favor. But it just tough for me to actually get all excited about it. WWE. I'll look at a chart of it here, but this thing had been on the way down, but the whole idea had been that these were going to make a huge amount of cash, but I have a feeling we may be seeing a stock going back to a couple of bucks over the near future out here. Certainly busting through its breakout area that goes all the way back to September 23rd of 2013. And I don't know, a lot of PR, not enough substance out there, kind of cotton candy. Nice and sweet, but turns to nothing almost instantly for WWE. For the other one, the IPO du jour is True. And this one is kind of a funny company. They couldn't get out the door with their old name, so they changed their name, came public under a different company, dropped the range. I think they were supposed to come out $12 to $14 per share. Came out at $9. It did pop. It's trading out here at $10.16. Went as high as at $10.75. But some of these IPOs are still making it out the door by hook or crook. And of course, this is the one that gives you car prices locally. And I'm rather dubious of it. It certainly smacks of a IPO kicked out the door by hook or crook, and in this case I think both, but we can do that. I got a question in the den. I don't know if it's for me or not, and that is AGN filling the gap. AGN, we'll take a quick look at it before we start getting into some other companies. Allergen certainly is. We talked about this yesterday with Jim Chanos, saying go long Allergen and short the acquirer out here. What can you say? Coming back into the gap on light volume. Of course, I think they're pretty much fully priced now based on what the V company is willing to do. What was the name of that company? I'm just having a mental blank now. It doesn't matter. I can't remember. Begin with a V now. VRX. Thank you, Joe in the den. VRX. Let's see if we've got any movement in that today. This thing is coming down faster than Allergen, so we can keep an eye on that. But what can you say? Light volume, lower load today. How about Plug? Plug. I've been telling people to stay away from these. Almost all of these have offered secondaries. And we're going to have some of these kind of a pop. Not a bad pattern out here, but you would have liked this thing to probably not gone any lower than the $4.50 range. This thing went to $3.62. Problematic at best. The other problem with a lot of these, Plug Power and all these others, if they all filed to issue additional shares. I haven't checked on Plug Power, but if they haven't, they're gonna. And if they haven't, and they're gonna, it could even get worse. So I would stay away from all of these pseudo energy companies that have energy delivery systems that are 10 or 20 times as expensive as traditional batteries now. I just don't understand how they're ever going to compete. There's a few reasons to buy them. You're building a submarine and you want to run it like a nuclear sub, quiet, then maybe you want to buy something like a hydrogen oxygen fuel cell. But other than that, technology of the future and always will be. SCTY, that was a little bit better. SCTY, I remember seeing that up earlier today, or was it last few days? It's down a little bit. All these companies, again, Solar City, there's just no financial wherewithal. And the biggest problem I would see with almost all these companies is that they have acted as huge political donors for the current party in power. I would suspect that from all of the polling information that there's going to be little or no chance any of those subsidies are going to be coming back in 2016. So we're probably well within the last year of subsidies for these companies. And they've been waning already. The subsidies were not all linear. They started off much bigger, and they've been declining. So we're kind of looking at the same thing, the taper of all these solar companies, solar cell companies. They have brought their expenses and their costs down, but it's still in the neighborhood of 4 times more expensive to actually manufacture these. And the only way that Solar City makes money is everybody that is next to and a neighbor of in one of these installations ends up paying for it. And of course, a lot of good feel-good stuff. Really doesn't change the metrics of what's affordable and what's not in the power generation. So I would say the fundamental reason is against these guys. I can see that maybe they found some short-term support. You may even get another decent rally out of these companies. Just remember that the pier may be long, but it will end. And when it ends, you're going to be in some deep water with all of these solar and energy companies again, because, like I said, the new parties that will come and own the House and the Senate this probably, what is going to be, January of next year, probably not going to like it that all these companies were basically bagmen for the other side. And it happens both ways, so I'm not going to point any fingers at particular parties, just that somebody's going to get their ox gored, and next year it's going to be somebody else. But look for almost all these companies to have extreme problems when those subsidies go away. Solar City, all those solar companies, all those plug power companies, look for all that money just to go to money heaven. It's not going to be coming to them anytime soon. Let's see what else. Could you get a bounce? I would say that if you're really looking at Solar City out here and want to get back into it, you got these big 3 gaps. And that would take you back to that gap with a volume from the 11th of, October in 2013. And the low of day out there was $41.85. That's where you would want to look at this thing. You've got support there, and you got massive volume of 17.8 million shares. My guess is that there's an 80 to 90% chance that that's where that thing's going. So look at that thing again at about 41 bucks. And probably decent support there. So I hope that helped. Got a few stocks I wanted to look at. And again, you can give me a call at 877-927-6648. Aceto Corporation, ACET. I don't know a lot about this one, but I like the chart. And we'll read about the headlines here in just a second here. Sources, market, sells, and distributes pharmaceutical intermediates and active ingredients, finished dosage form generics. Okay? This one's back down to what should be fairly a decent support level. Another one where this one gapped up on strong, a sign of strength, let me put it that way. That happened on November 8th of 2013. It's come back in there twice and tried to go back into this gap. The second time with more volume, actually twice as much volume back here at February 7th. So you had kind of a nice little pop, a lot of volume. It's gone back up, pretty much did that. Now, what you have today out here is about 400,000 shares. And you're in that gap with 1.2 million shares. So it's going to be kind of interesting to look at some of these. What you do have, of course, is some high volume down days. So your upside's probably limited around 19 on that one. AMH, American Homes for Rent. Now this one, if it was a little more expensive, would be a better short candidate. As far as I'm looking at it, but nice gap down on March 11th with 3.2 million shares. That gap's remained open. Tried to get into it on March 21st with 9.4 million shares. Couldn't hold it a couple of days ago, 1.6 million shares last few days. Well, you had 3.3 million shares yesterday, but really couldn't get anything going. 700,000 today, can't really get anything going to the downside. But these are the ones that I'm kind of keeping an eye on. We are filling a lot of gaps out here. Artesian Partners Asset Management, and this one's had a nice gap up with some decent energy. What I'm really more interested in is the last couple of lows. This one, April 15th, had $52.66 for the low with 1.6 million shares. Yesterday we got into that, closed above it with 730,000 shares. Artesian Partners provides investment management services in the United States and internationally, offers 12 equity investment strategies spanning various market capitalization segments. Artesian Partners. So, yeah, keep an eye on that. CCJ. This one is kind of interesting. It had kind of made a little Gartley pattern that had failed, and may go into a butterfly. But this thing did come down here and test this February 10th low, and it's what I've been watching, $19.74, 9.3 million shares, got into 19.44 on the 9th. It did bounce with a little bit of volume and been coming back down, but I really like the way that the volume's kind of been coming down for the most part. Yesterday had some more volume with the market decline, but today, very light volume. If it could get back in there with a lighter volume next week, we might see a bottom in some of these uranium stocks, so keep an eye on those. Let's see, what else do we have? Boy, this mouse is going insane. Okay, let's check back in real quickly. 1871.53 on the S&P cash, 2.17 billion shares. So light volume day continues, and we haven't been able to close below that 1868. I would say that I would negate that if we get any kind of volume and a close below it next week. Maybe we could see lower, but I think the volume is going to remain low. So if you are bullish in this market, you want this market to pull back on lighter volume through the rest of this coming week. If you are bearish, you'd love to see a lot of short squeezes and maybe the opportunity to get all the shorts out of a stock at a much higher price and a much sweeter trade, probably when you come back after that 3-day weekend. Kamiko. Anyway, I kind of like this, but we really need that 1944 tested in Kamiko. I really like kind of that whole sector. I just haven't bought anything yet in uranium, but interesting nonetheless. We're going to have to talk to Andy next week, too, why the USDA needs SWAT teams. I'll talk about that when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, I'm going to look at a couple of these high flyers and see how they're doing today. Amazon.com, up a little, but of course they opened lower. Not a lot of volume out here. Certainly looks like this wants to come back to probably about 288, and it's going to need some volume to break through that. Already broke through it once, but could not even. It could just be it. That may be the last test today, and this thing probably in some kind of trading range up to this gap down at what is that? 2, or excuse me, is it 3? It is. I've got to look at it here. 320. So you might have a nice little range out here in Amazon. So you got to keep an eye on that. Apple, of course, this is expiration, so they're going to work pretty hard to get a lot of these stocks to pin at the end of the day. And what's our Apple trading off? $593.36, up $4.50. Kind of hard to figure that out. Of course, you got another $1.5 billion with Icon pushing this stock. So I would say that the problem with this is Icon is going to be able to juice this pretty much anytime he wants. So I'm probably going to stay away from it a bit. IBM flat on the day. Probably the weakest of these big blue chips. And you would have liked to have seen some energy in this thing. Certainly not getting it today. I think, like I said, probably looking at a short squeeze through Friday, and it may not be a big one, but it may just be one of these things where you see $1 higher every day in something like IBM, slowly squeezing people out into the long weekend. And then the market's changing character as they come back from those long weekends. Doesn't always have to change directions, but generally, if it's choppy, it'll go to a trend. If it's a trending, it'll go to choppy. Most of the time, if it's going up, start its pullback. There's, I think, just something to everybody taking that extra day off, going on vacation, driving to mom's, firing off some fireworks. A lot of that kind of stuff that just changes and gives an opportunity for a breath of fresh air, and people decide to get out of what they're doing. Today would have been a perfect day for the market to crack, and that it didn't, that it's going to have tested lower numbers on a lighter volume once again today. Gives me a good idea that we're probably going to see Monday and Tuesday rollover for options. That we're probably going to have a little bit more volatility those 2 days. Probably going to be a very, very quiet Wednesday morning into the Fed notes in the afternoon. And besides HP coming out with earnings, that's probably going to be it. As soon as they come after earnings, I suspect we're going to start hearing crickets on the New York Stock Exchange floor and the pitter-patter of little feet as people start leaving to go to the Hamptons and enjoy their mega millions from high-frequency trading. But I digress, and of course we digress often. I've got a lot of stuff to talk about in the first hour of the Tom O'Brien Show, where we're going to be talking technology. So that will be an interesting discussion. I hope you will join us then. If not, then back on Monday. Same bat channel, same bat time, and I'll always remind you to sell when you can, not when you have to. You always feel just a little bit better. And if you listen to that song we played at the Open, maybe you want to listen to it again. Warren Zevon, just think about me for a while. What a great song. Loved that it was in the end of NCIS this week, but what a great song from Warren Zevon. Take a listen. See you Monday or later today. One or the other.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.